Okay, so it's a little past 18, and we'll get into our program. To begin with, I'd just like to extend a very warm welcome to everyone that has joined in to our ECON chat this evening. It's actually a very exciting thing for the projects committee because this is our first ever ECON chat. It's the first of the series. My name is Ailina Sehara. I'm from Unzabeka's projects committee. And as we may or may not be aware, Unzabeka is the University of Zambia's Business Administration and Economics Association. And one of the things, or rather the central tenet of our association, is to make sure that we bridge the gap between what it is that we learn in class and what we find in the outside world. And that's what this ECON chat will be about. So going into the rest of the academic year, we're going to have chats between students, as we will tonight, and someone from the outside world, so that we try and engage and discuss different things that will be able to give us insight and do just exactly that, which is bridging the gap. So without wasting much time, I'll introduce our panelists for tonight. Our first panelist is Mr. Webster Twambo, who's an insurance expert. We also have Katongo Mudenda, who's a student at the University of Zambia. He's studying actuarial science, as well as Lusekelo, who'll be joining us a little later. She's a business administration and economics student. Before I let them get into the topic, would just like to ask that everyone keeps their mics muted so that we're able to have our meeting well. If anyone has questions either during the meeting or as we continue or after, just kindly log them into the chat and then we'll be able to look at them depending on how much time we have afterwards. Okay, without further ado, tonight's topic is the future of insurance in Zambia. We'll get right into the questions, with question one being, what's the role of insurance in the Zambian economy? Katongo?
Thank you, Elena. First, I'd like to say good evening to everyone. I hope I'm audible.
Yeah, you are.
Okay. Thank you for everyone that has made through for this meeting. I'm grateful. I've seen a lot of friends and family. That's always a mix here. So, I thought the question which was already asked by Leonardo. And so, the role of insurance in the Zambian economy. So first, to understand the role, we must understand what exactly insurance is. For my findings, I find that insurance is a contract written by a policy or a contract that is referred to by a policy. And the contract is basically just a contract of indemnification. Now, what is indemnification? Indemnification is basically just indemnification. So indemnification is basically just sorry, I'm a bit nervous. Indemnification is basically just something that's it's basically you being paid back money for a financial loss. If you make a financial loss, you'll be indemnified, you'll be given back the full value of your loss, not more than less. So insurance is basically just a contract whereby one party that can some window, can you just mute your mic? I'm getting some feedback. Okay, yes. So I was saying insurance is basically a contract between two parties, where one party, which we call the insurer, insures another party who has a risk and wants to uptake that risk, but is afraid that the risk will cause detrimental effect to their business or themselves. So yes, that's basically insurance. So it's very beneficial to the economy in the sense people now are able to venture into many business ventures, and without them really worrying about the financial loss, because now they are insured. So it promotes a lot of economic activities, and it promotes a lot of what do you call it? It promotes a lot of people to take risks. Yes, I think Mr. Webster will shed more light on it.
All right, I jump in.
Yes, you can, sir.
All right, I don't know if you want me to use my video or just audio is fine. You want to see me?
I think it would be good if we saw you, sir.
That would be good if it's possible. Yes, please.
Okay, I'll turn on my video. All right, great. Thanks, Unzabeka. Great initiative. We are going to support this initiative. I think where we stand as insurers and reinsurers, we need to raise awareness on insurance and its benefits. And this is a great initiative which we are going to support. So well done for this initiative, and thanks for inviting me to speak on this platform. So back to the question of what insurance is, I think Katongo has done some justice, bringing the technical words like indemnity, indemnification. Those are big words. Some people have tried to name, to give their children such names which are very big technical names. But I hope everyone in here will not try to do that, but just appreciate and understand what it means. So really, to break it down to a layman's point of view, insurance, let me begin by saying there are two things that are guaranteed in life. One is taxes. Everyone pays tax, whether they like it or not, indirect or direct, they pay tax. The other one is risk. Risk is uncertainty about the future or the likelihood of some unfavorable event occurring. So whether you are a student who is at UNZA in your room, there's some uncertainty there. You want to go to town to go and buy your groceries or to go and whatever, visit a friend, there's a risk that you could be involved in an accident on your way. If you choose to walk, we have seen pedestrians who've been hit by motor vehicles and what. So this is not to create fear of risk, but to be aware of the existence of risk. So given that risk is guaranteed, how do we deal with risk then? How are we going to venture into business? Because business itself is a risk. You put in so much money and then there's a risk that your building can catch fire. So how do we go about this risk issue? So this is where insurance comes in as a safety net to protect you against risk. So essentially you transfer the risk that you're facing to another party called an insurer at some consideration called premium. So its insurance is a safety net. So it provides you with that protection so that in the event of the unfortunate event occurring, then you have a fallback. Borrowing Katongo's word of indemnification. So if an insurance is on indemnification basis, then you will be put back in the position you were before the loss. Nothing more, nothing less. So, but there are also other forms of insurance that are not on indemnification basis, which are benefit policies. For instance, if you get injured in an accident, you cannot be put in a position you were before the loss. So those forms of insurance are called benefit policies, and you can have as many benefit policies as you like. Also, essential to mention that there is no value that can be placed on life. So if someone dies as a result of an accident, for instance, there's really no financial value that you can place on life. So consequently, you get benefit policies which pay a benefit when such an occurrence happens. So in a nutshell, I think that's how we can look at insurance. So, and we must also appreciate that insurance has got three legs here in Zambia, in the Zambian context. You have life insurance, general insurance. We also have pensions. So that's how I would put it together.
Okay, all right. Now, having understood what insurance is and its importance, does the insurance sector in Zambia significantly contribute to Zambia's economic performance? Katongo, are you able to start on that one?
Yes, I can. So in simple terms, yes, it does. It does. It does contribute to Zambia's economy. Insurance does contribute significantly to any economy. So how does it do this? So insurance, like we said, it's taken up by business. It allows businesses to take up some forms of risks and be certain, and removes the uncertainty aspects to certain types of businesses. So it also does promote trade and commerce, in turn, which in turn bring about activities which grow the economy, right? So it also brings together our traders and our savers, and it also, because it's very vast and it has a lot of sectors, it creates employment, right? Creates a lot of employment. We have people who come in from who did economics coming to insurance, people who are experts in selective fields, like people who are experts with cars can come and help out in car insurance. People who are experts in health, in the health sector, can come and help out in health insurance, and so on and so forth. So it does, in a nutshell, it does contribute significantly to Zambia's economy and any economy at large.
Okay.
Yeah, I think Mr. Webster can add on.
Right. Thank you very much. So the role of insurance in economic development, I think what Katongo has mentioned is very vital. I'll just add a few more points. Firstly, let's tackle the issue of giving confidence. All right, confidence to investors. Investors who put in money in different ventures face with several risks.
Stop fidgeting.
For instance, okay, that's for me? Okay.
I think you can go on. Someone's mic was on.
All right. So I like the fact that, you know, you're trying to bridge theory and practice. That's very important in this conversation. So then, how do we explain insurance, the role of insurance in economic development? So I was talking about confidence. The just ended elections, I think we are all familiar with the campaign slogan of Bali will fix it. And I think this was well appreciated across the young population. You know, Bali will fix it, Bali will fix it. Good campaign slogan. But you see, when you check what Bloomberg said about the president-elect, what they have said is that, you know, he's a very good political risk He creates a very good political risk hedge. Probably his approach, in terms of supporting the rule of law based on his first address to the nation and so on and so forth. So I believe as much as possible, he can fix the political risk, as it were, as quoted by Bloomberg and other international media platforms. But Bali will not fix the operational risk. No matter how much we like him, he will not fix the operational risk. That's the risk which you face as an entrepreneur, the risk of fire. If there's a fire at your factory, trust me, Bali will not fix it. You have to fix it as a business. So given that explanation, then it gives you the context. It puts context to the fact that investors need some form of protection, because when these risks occur, they may find the business unprepared, because no one prepares for the fire. So insurance provides that financial protections so much so that in an event of the insured risk occurring, then they can be that fallback. So you can imagine someone who has about Bali being a good, providing that political risk hedge, comes in with say trucks as a transporter. Then on the road, there are various risks that they face, and they say they're involved in an accident, and then their truck is damaged. That's an operational risk. So insurance will come in, as much as Bali is providing that political risk hedge, but then the loss to the truck will not be fixed by Bali. It's the insurance company that is going to fix that, or that is going to compensate that. So essentially, insurance provides that confidence. An entrepreneur can go into business knowing that if anything happens, if the insurable risks occur, they can have a fallback. They have that safety net. Secondly, insurance facilitates international trade. Insurance companies play big on the international scene. So it's one of the businesses that are global in nature under the principle of sharing risks. All right. So we've got risks which are in Zambia, which are exported. So we see premiums outside. Then when there's a loss locally here, then we have inflows that come to pay the losses. So you find that the economic shock, which happens as a result of some losses here, is absorbed by the inflows that come from outside. So when you talk about a risk, for instance, the September 11 World Trade Center disaster in the US, so you find that risk was well spread across the world. So there's actually some African insurance companies or reinsurance companies that picked up the loss. So by virtue of this global mechanism of insurance, it helps cushion the local economic impact when there's a loss. So that's very important. So then the other point we have to note is the provision of financial protection. I think we already believed that point. Then also through the pooling of resources, because what happens is insurance really operates under the principle of a common pool. So the principle of the common pool is where the losses of the unfortunate few are paid for by the contributions of many. So you pool together resources, and remember that losses do not occur the following day. The insurance companies are going to hold on to those funds for some time. And while they're holding those funds, they can invest. So the insurance companies are actually big players when it comes to investments. They play big in government bonds, in treasury bills, stocks, and so on and so forth. So those are some of the critical points of the role of insurance in Zambia. If we went across to America, for instance, the American Insurance Association just the property and casualty insurers operating in the US, they have over 1.4 trillion investment in the economy. So you can see the scale that is quite extensive. It's not small numbers. So in a nutshell, that's how I see insurance really contributing to the development of the local economy. I submit.
Hello, Linase. Okay, I think Linase may be having some technical difficulties. So I'll just go ahead and read the third question and answer it. So the third question reads, how has COVID-19 affected the insurance sector? So from my research, from my little bit of research, I found out that COVID-19, it's a very bad pandemic, which we've all suffered as a country, as individuals, also personally. There's been some losses in the families. So how has the insurance sector taken up these days? So what we've seen so far, or from what I found out, is that the health sector and the life insurance companies have suffered huge loss. Now people had to pay those claims. The claims rose because now those people that there were people that were dying, and so some of those people were on some life insurance plans, and so insurance companies had to pay those claims. And then, however, in the general insurance sector, which is the insurance sector that deals with that doesn't deal with life, which are, for example, the motor insurance sector, the air sector, and all that, we saw that there were very little claims from those, except maybe from the business interruption, because there's a policy which is called a business interruption policy, where a business is allowed to make claims if they had subscribed to that policy. They're allowed to make claims for their business being interrupted for mostly it's usually fire. Very few of them had one for pandemics and whatnot. So yeah, we saw that in the motor insurance sector, there was very few claims because there were very few accidents, because very few people were on the road and all that. So yeah, maybe Mr. Webster can add more meat to the bone.
Okay, great. You've rightly put us, Twambo, you've well explained. So the insurance sector has really felt the impact of the COVID-19. So this effect or the impact, we can look at it from internal, that's within insurance companies, and external, that's outside insurance companies. So when you look at internal processes, if you are to dissect the various departments or functions of an insurance company, you look at the underwriting function, the claims function, even human capital, IT, and so on and so forth. You can see that there's been a huge shakeup in terms of the traditional approach. So an insurance company normally would, if we pick the underwriting function, for instance, they would want to inspect a motor vehicle, all right, for them to cover that risk, as an example. But here is COVID. First of all, maybe the owner of the vehicle is not able to drive that car to bring it to your premises. then how do you underwrite? How do you underwrite a risk where you are supposed to carry out a survey before you take it on? And maybe there are restrictions on those premises. You cannot go because of COVID restrictions. You cannot do a survey. So that has kind of made insurance companies to sit up and look at ways, innovative ways of underwriting. When you come to human capital, for instance, we have, I think majority of the insurance companies now have effected the work from home concept. So we have seen actually from government where there are restrictions or guidelines in terms of the number of people that can work from the office. I think at some point there was this partial lockdown. So that kind of affected the traditional way of doing business from the human capital point of view, which insurance companies were not spared. Then on the business front, I think most of the points were mentioned by Katongo, but if I can pick or highlight one aspect, travel insurance. So travel insurance is really big in this market, but we see that as the COVID-19 was, as everyone was grappling with COVID-19, we saw a number of airlines suspending flights. I think in Africa, only ET, I think, was able to fly. A lot of cancellations were done. So that significantly affected revenue generation. So from what insurance companies had projected or budgeted for, they were not able to generate that revenue. So it was some significant loss of revenue. So another point which I may want to qualify is when it comes to the claims aspect, I did highlight the significance or the role that insurance plays to an economy. In Zambia, for instance, in 2020, I think the insurance sector contributed about 3.7, almost close to 4 billion in terms of income. So that's a contribution towards the gross domestic product. But on the flip side, there are also claims that are paid. So as a result of the COVID-19, we see, for instance, the Wimbledon. We all know the Wimbledon from the UK, where an insurance payout was made in excess of $150 million by virtue of the cancellation of the Wimbledon. That was 2020 Wimbledon. This year, I think we did have the Wimbledon. So that was a payout. So insurance, those clients who had business interruption. So let me explain something here for the benefit of everyone who is listening. A business interruption policy is a policy that compensates the customer when there is a material damage loss. So there has to be a material damage loss. There has to be a fire. Then as a result of a fire, you're not able to operate, you're losing revenue. Then business interruption kicks in to compensate you for the loss of revenue. All right? But then you can still lose revenue minus physical damage being there. So if you have a provision in the policy of no damage, it's called a no damage clause, no physical damage, then it means when you suffer loss, then you can have a payout. In the absence of that, even if you have a business interruption policy, a standard policy, you may not claim successfully under a pandemic. In fact, almost all insurance policies in Zambia, they have a general exclusion on pandemics. So any loss that is associated with a pandemic is not recoverable under an insurance policy. So you need to buy back or make special arrangements for you to have that protection from pandemics. So it's very important that everyone who is listening out there, they really understand how business interruption works. So in a nutshell, that would be my contribution.
Okay. And with regards to the potential of digitalizing the insurance sector, what is the potential?
So from my findings again, I find that there's huge potential in the digitalizing insurance. There's huge potential because right now I think some companies in Zambia are trying to work on ways in which because of the pandemic we're in, they're trying to. I think earlier Mr. Twambo highlighted the fact that we can't do surveys now, or most companies were failing to do surveys because of the regulations that were put in place because of COVID. They couldn't go on site because some companies were restricted to the number of people who were allowed in the premises. So with that, innovation has taken place. Some people are thinking of ways in which they can do surveys without actually being, and the surveys are reliable and truthful. So yeah, there's huge potential, and we are the insurance sector rather is trying to work in ways in which they could underwrite policies without them actually underwrite policies that are very accurate without them actually having to be with the person they're underwriting for. So yes, I think that's most of what I found. Mr. Twambo will surely highlight and give us a brighter view.
Yeah, thanks, Katongo. So the potential is massive. It's so massive. And we can begin first from the uninsured population. So when you look at the FinScope study of 2020, the penetration or the uptake of insurance in Zambia is just about 5% of the adult population. So you have the 95%. And if you break it further, you look at where are these people? Where are they located? So you find that a number of people that are unreached are in remote places. But the interesting finding again from the FinScope study is that the uptake of mobile money, actually, as at 2020, it was about 58%, a growth from 14% in 2015 to about 58%. So you can see that the growth rate is very significant. So the question is that, how do you reach out to these people who have mobile money? Innovation comes in and it gives, it creates potential for digitalization. If we walk across to Zimbabwe, for instance, when you look at what ECON is doing, I had the opportunity of interacting with some friends at some international conference that was in South Africa last year or the other year. And I was able to appreciate the model or how they have created solutions which reach to an ordinary farmer, for instance, through what they call the eco farmers combo through ECONet. So a farmer is able to pay for the insurance using their mobile phone, and claims are able to be paid through the same channel. So we can see that, you know, that it's some great innovation out there. So coming down here, or coming back to Zambia, we have seen what Smart Zambia have done in terms of digitalizing the public service. They have done a commendable job. We have seen what trucks have done in terms of buying road tax online and so on and so forth. That has created an opportunity for insurance companies to also sell insurance on their digital platforms. So as at now, you're able to buy insurance online and also buy road tax online. I think that's a great development. So the potential really for digitalization is massive, and I see that for me the future of insurance really is on the digital solutions. A customer who sits at home in the comfort of their home, they're able to buy insurance using their mobile phone or on their laptop. That's the way to go. And I think the environment is ripe for the insurance industry to be disrupted, so that, and this disruption I think will happen through digitalization.
Okay. Now, as with all things, we do face challenges or hurdles. So with regards to the insurance sector in Zambia, are you able to cite some of the challenges and how they can be solved or faced?
Okay, I don't know if I should go. I think I can go first. So some of the challenges I found was that, or the major challenge I found was that insurance companies are in a lot of credit. So they have a lot of data, and they have found a very big, there's a very big hole in which they are failing to meet the claims because they still haven't gotten the money from the premiums. And remember, the premiums are the premiums are the considerations or the payments which individuals or institutions pay in order to set up their insurance policy. So yes, the major challenge was that insurance companies were not able to collect all the premiums that were owed to them. So this was a major challenge. And so yeah, of course, given our economic condition, it is very normal to find that this situation is what is in Zambia. Yeah. Mr. Webster, Mr. Twambo, I'm sure you give us some more insights.
Yeah, it's a big point, and I think it's a reflection of the credit culture here in Zambia. When you look at, even at national level, look at how much debt we have accumulated, and we even miss paying on some coupons, as it were. So it's I think it's a reflection of the credit culture, where we are so used to borrowing. We borrow talk time, that what do you call it on Airtel? What? Say it again. CDs. Yeah. You know. So all those issues are a reflection of our culture, which we really have to work on. And when you look at the numbers, the debtors ratio, for instance, is in excess of 40% in the industry. That's not a good statistic. So it means when someone buys insurance, there's 40% chance that they will not pay for that insurance. Yeah, so it's really a credit culture issue which we have to address as a nation. But maybe other challenges, it should always make an insurer think. When you look at mobile money use or uptake, it's 58%. When you look at the bank, the banking sector, they have about 20%. Of course, it's a reduction from about 25% in 2015. Maybe this is linked to the advent of mobile money. Pension, so the pension side has grown from about 4% to about 8.2% in 2020. Insurance from about 2.8 to 5%. So why do we have little growth in insurance? So some of the reasons, some of the findings, other than what Katongo has mentioned, and I think you find some of these challenges in the 2020 FinScope study. The biggest challenge was from the findings was that most people, 40% of the respondents never heard of insurance. So lack of awareness of insurance. So we have 40 from the respondents, 40% have never heard of insurance. Then the second challenge is affordability, which is about 25%. Then we also have other challenges like people, they don't know how it works, don't know how insurance works. And this we can actually even trace it back to, you remember the time, some of you might remember when Airtel was providing compulsory insurance to all their subscribers that was around 2013, 2014, where more than a million people, if I'm not mistaken, were insured. But when a survey was done, people were not aware of how it worked, but they were insured. We recorded that they were insured from the business side, but people were not aware that they were insured. Yeah. So some of the issues from the FinScope study are that people, they don't know where to get insurance. Okay. Some say they don't need it. And it's also a reflection in our culture. For instance, if you talk about funeral insurance, the moment you just say funeral insurance, you want to sell insurance, someone will think that you want to kill them. Those are serious cultural issues, which, of course, along the way, they have to be dealt with. And there's been some strides, I think, to that effect. So for now, those are the challenges that I can think of.
Okay. Now, considering that some people before or even after listening to this conversation may consider a career in insurance, could you briefly give some insight or anything that you might have to say for someone that's considering pursuing a career in insurance?
Okay, I can jump on that. Career insurance. So when you ask people practice, when you ask people in insurance, you ask how many that are in insurance now who dreamt of doing insurance, you find that the number will be very small. Even when we come to schools, for instance, at secondary school or even university or college to some extent, you ask those who want to pursue insurance, you find that there are very few. So it means that the talent that we attract in the insurance sector is by accident. Simply because, people there are limited opportunities in the job market. And here's someone who just finds an opportunity. For instance, in my case, doing insurance was accidental. I never dreamt of doing insurance. And when I stepped in the sector, that's when my mind opened. Oh, how come no one told me about this? They are brilliant careers in insurance, very big. There are people who are making it big. So it's very important, first of all, to appreciate that you can actually have a very successful career in insurance. And you don't necessarily have to be someone trained in insurance. So we've got a diverse, a multi-skill, a lot of skills in insurance, in the insurance sector. So we have people who have done mathematics, we have economists, we have doctors, we have economists, we have so many professionals with different skills that are in the insurance sector. So I think there's a place for different skills, and it all comes down to opportunities. if you look at, for instance, the owner of Madison Insurance, who started as a sales rep. But if I were to ask students on this call, I mean, how many would take an opportunity, would take on that challenge of being a sales agent for an insurance company, to start as an insurance agent? You find that maybe very few. And I must mention that you don't start climbing the tree from the top. You start from the bottom. Once you have an opportunity to climb the tree from the bottom, take on the challenge. And then once you are in there, then you keep on progressing, improving yourself, and then take on opportunities as they are. So a career in insurance is very possible. You get an opportunity. Of course, there are limited opportunities, just like in different other sectors. The job market is very competitive now. We have a lot of graduates, even in insurance, who are looking for opportunities within the insurance sector. But opportunities are there. How to get them, I may not give you an exact. I may not give you maybe an exact way of doing it. It's just like finding a job elsewhere. But the tip is, if an opportunity presents itself, make it count, make the most of it. And always remember to continuously, in Japanese, they got a concept called Kaizen, which means continuous improvement. So you keep on improving yourself. For instance, when I joined the sector, I only had grade 12 certificates. So over the years, I improved myself, I upgraded, and today I've obtained the various qualifications and so on and so forth. So you can do it. So just keep looking for those opportunities, and once it presents itself, make it count. Thanks.
Okay. Thank you so much. The chat has been really insightful. Thank you, Mr. Twambo. We'll jump into the questions. We'll just pick maybe one question from the chat, so that we can allow Marlon to give us to speak to us after this. One of the questions we have here from Chipo is, do all insurance policies have dividends?
Maybe I can answer that. He says, do all insurance policies have dividends?
I think you can take that one.
Okay. Do all insurance companies have dividends?
Insurance policies.
Policies.
Yeah.
So let's understand what a dividend is. So a dividend is a return on investment. So a shareholder puts in money in a company, and then when there's a profit, they are paid. They are paid part of those profits in form of a dividend. So if we say insurance policies, I'm not really sure if it should be insurance policies or insurance companies. But what we have on policies, which is maybe similar to dividends, is there are policies from the life side which are with profits. So when you buy that insurance policy from a life company, and then the life insurance company is going to invest the funds, and when they make profits, then they share with the policy holder. So you can have a policy with profits. That's the closest that comes to this question. But otherwise, generally speaking, it's companies that pay dividends to the bondholders. I mean, to the shareholders.
Okay. Thank you so much. Marlon, can take the floor.
Sorry, I'm
Thank you
struggling
so
to hear you.
much.
Okay, go ahead, please.
I'm struggling to hear what you said, mentioning my name. Before I say what I want to say here, allow me just to say thank you for this insightful discussion. Personally, I've been actually inspired right now. I'm actually debating within myself either to go for insurance or maybe just continue with what I'm doing. But better still, I've got some good hope because I've said even in the insurance sector, we have got people who are doing economics, of which I would love probably to pursue a career in finance, a career in insurance later on. So thank you so much, Mr. Twambo and Katongo, for this session. Yeah, so my name is Marlon Zulu. I happen to be the vice chairperson for Unzabeka Projects Committee. So Unzabeka itself, as it is known, simply stands for the University of Zambia Business and Economics Association. So as the Projects Committee, we are part of the Unzabeka committees. What we do as projects committees to make sure we foster the motto that Unzabeka lands with, that is to bridge the theory, is to bridge the gap between theory and practice. In short, we make sure that we walk the talk. Whatever we learned in theory, we make sure that we put it to practice. So in this vein, we as the projects committee, we are always there organizing seminars, organizing webinars, of which our ECON chat is one of the platforms that Unzabeka through the projects committee provides. So we organize seminars, we organize webinars, we actually organize various events that are there to enlighten one another in regards to the business world, the academic
Thank you so much, Marlon, for that. Thank you, Elinase, for the moderation. Thank you, Katongo and Webster, for the amazing presentation. This meeting has now come to an end. For the pending questions, we'll present them to Marlon and Katongo, and we'll send back feedback through the WhatsApp.
Sorry, Nelly. There was just one more question. Mr. Webster said he could answer it. So let me just read the question quick so that, because I saw it was very, very interesting. So it says, comment on the disadvantages of digital insurance, such as risk of customer privacy and balanced pricing due to less accuracy in risk assessment? And what about proper digital service delivery to the people who already do not deem physical insurance as an option?
Are you able to read the question again?
Okay, let me just read it again. So it says, can you comment on the disadvantages of digital insurance, such as risk of customer privacy and balanced pricing due to less accuracy in risk assessment? And I think he goes on to say, and what about proper digital service delivery to a people who already do not deem physical insurance as an option?
All right, very good question, loaded. I'll try to unpack it. So firstly, disadvantages of, you can hear me?
Yes, we can get you.
All right, advantages of digital insurance against the risk of customer privacy. So really, this the generic disadvantage across, which is not unique to, or it's not distinct to insurance companies. So of course, there's the Data Protection Act, which protects privacy, data privacy, and so on and so forth. So this is not unique to insurance, and the fact that other sectors are already big in this space, we can only ride on such opportunities which are already there. The unbalanced pricing due to less accuracy in risk assessment. Yes, this is an interesting one. But I think before you offer a digital product, you need to do your homework in terms of how you design. So product design here will be very critical. And I must underscore also the fact that I think many times in the market, we have seen a lot of boardroom products that are designed in the boardroom and then taken to the market. But I think what we need is demand-driven products, where you do your research, you understand what the needs of the customers, you invest in R&D, and then come up with demand-driven products. So I think if you do your product design properly, then it should be able to address the concerns of the risk of inadequate premiums due to the risk of assessment. So product design will be very critical in addressing this. And the other bit is around people who already do not deem physical insurance as an option. And again, here, what we need to do is to raise awareness of insurance and its benefits. We have seen, I think I did highlight that one of the key challenges in insurance is we have a lot of people who've never heard of insurance. So probably if they heard of insurance and its benefits, they would probably appreciate. And one of the ways people could appreciate insurance is testimonials. You have someone maybe who had an insurance policy, they suffered a loss, they were paid. You get to document such experiences and share with those who have not taken insurance. Such experiences would go a long way in helping people appreciate insurance. So it still links back to the generic-ish challenge of lack of awareness of insurance and its benefits. So really, when someone appreciates insurance, really it doesn't matter the platform, whether digitally or traditionally, they should be able to get insurance. So the bottom line here, the underlying issue is around lack of awareness.
All right, thank you so much. As we mentioned, the rest of the questions can be lodged into the chat, and then we'll be able to give back
There's a hand.
afterwards. We'll now end our meeting. Just
I don't know if you allow Dorothy. Is raising her hand.
I think Dorothy can go ahead.
you can go ahead. Just keep it brief.
Okay, so he spoke about awareness as being a challenge in Zambia. So I wanted to find out so I was reading the PwC survey report, the industry report, and it said understanding the role and benefits of the insurance itself is a challenge. So that was the 2019 survey. So from 2019 to date, has there been a change in the awareness and appreciation of insurance?
That's a good, and it's a very intelligent question. So how the starting point is, how do we measure uptake of insurance? There are different forms of measuring uptake. The first approach is measuring it against GDP. You look at its contribution towards GDP, of which we have seen some significant growth. And let me mention that insurance actually has been growing above GDP growth. So the past 5 years, for instance, the growth has been over 10%. But if you dig deeper there, you may find that there is also the exchange rate effect, because the financial reporting is done in Kwacha, but you also have US dollar denominated policies. So when you convert, you find that there's an exchange gain. So sometimes there's that superficial growth. But that's one side of measuring it. So it's easier, because then you just consolidate the results from the industry and then check it against your GDP. So PIA normally does that. The AIZ also, they do that. That's one side. The other approach is to carry out surveys. For instance, what the FinScope survey, what they have done over the years. So if you check, just Google the FinScope survey of 2020, it gives I think well-researched numbers. So other than those two measures, I'm not aware of other means of measuring uptake here in Zambia. So if we consolidate, then it may be difficult, especially when we look at the number of people who have taken up insurance. It's also an area of research. It's a challenge to you who are in school. You could do a research. It can actually be a very good paper to look at how many people have taken up insurance between 2019 and to date. It's all about data. Do research, then publish findings. So that's my take, Dorothy, on your question.
Thank you. And I'm actually doing a research on insurance for my school.
Oh, great. If you need help, if you need input, time permitting, you can reach out to me.
Thank you so much. And thank you for your book. I actually received your book, The Basics of Insurance. So thank you so much. I wanted to personally thank you for that.
Awesome. Welcome.
All right. Thank you so much. Seeing as we've gone into overtime, we'll end the meeting. Just to note, Unzabeka is running an essay writing competition that you can search more about from our social media pages. You can look up on LinkedIn or Facebook. Yeah, we'll now end the meeting. Thank you so much to everyone that logged in, and thank you to our panelists as well as Marlon. Good night.
Thank you. Bye-bye.
Thank you. Good night.